Hey, it's Joel Olson coming at you with another variable rate update. So I want to talk today about what are we getting wrong and why are we getting it wrong. In particular, if you had asked me in February, hey, we know rate hikes are on the horizon. Um, what is the reason why some of that predictions has been off? If you had asked me, do I think rates will go up so much over a short period of time? I would have said definitively no, based on a lot of reasons that I would say still remain true today. But what has really changed in the environment here? So the first thing that's changed here is that we know that during the last couple of years, the Fed came out and they established that that they believed that inflation was transitory. Transitory means inflation will go away. It will go away itself. They don't need to do anything extra. It will go away itself. And so that obviously proved to not be the case. And so what happened is that the Bank of Canada has been largely panned, as well as other central banks, have been largely panned for not doing enough sooner. And so we have a lot of "I'll show you" behavior. So I'll show you because inflation is running high, and I'll show you that I can do whatever it takes to make sense. The truth is, and we cannot emphasize enough, inflation is not a result just of of interest rates. Interest rates are one tool in order to slow growth of the economy. If you feel richer, if you feel poorer, if you feel like you have less wealth and you have less money, know that is the goal. That is the goal of what's happening right now, that they would make you feel a little poorer so that you would spend a little less. That's the idea behind these rate hikes. So if you're feeling that, that is that is what's happening. So we have a lot of "I'll show you" attitude, and that's very important here to be aware of. I'll show you that I can do whatever it takes. A very problematic approach, but that's what's happening. Number two, we are trying to control a problem that we do not know if we have it under control or not. I like to say in my business that it takes about 90 days for me to see a result of some type of effort, marketing effort, process effort, anything like that. So if we're closing a deal today, it's not because we did something great yesterday, it's because we did something great 90 days ago. This is true of nearly anything. The problem we have right now is, let's take the July rate hike. July rate hike, we go up a full percent, middle of July. If you were buying a home, and let's just take housing, even though this applies to so many other things, let's just take housing. If you were buying a home during that time period, um, before the rate hike happened, you had already put an offer in, already kind of show, so you were closing in July. That is the result of what most August house prices are as well. They're not, their house sales are a result of people putting and buying stuff in prior to the rate hikes. So if we think about, did the rate has the rate hike had its intended purpose, and we're talking about the July one, not the most recent ones. Has the rate hike had its intended purpose? We don't even know yet, because most people are going to have that behavior affecting them towards the end of August and early September. We don't even know yet what these interest rates are doing. So no matter what anybody says that's really smart, or economists out there, we have to all of a sudden start believing here that Bank of Canada has a huge posturing problem where they're saying they're doing things to look really good, knowing they don't even have the data to know if any of this is moving. And no matter what anybody says, that is the ultimate truth here, and that's very, very important to be aware of. They do not know what's going to happen. When we think about the idea, I've talked about in a lot of videos that they could be raising rates for a meaningful recession, I think that point is already gone. They've already raised rates more than people, they've already affected the economy more than they've seen, because the data has not come out to prove that. And we're going to see that over the next little while. But that's a big reason why we've seen some rate hikes be a lot different than usual. Okay? And so what do we think going forward? There's still talk about more rate hikes going forward. Well, here's some data points that we know that we didn't know before. I think I mentioned these a couple weeks ago, so apologies for the redundancy, but it's important to be aware of. What's going to stop rate hikes from going up? So for the other thing that I think is more of a reasonable thing is that people still haven't. If we look on the ground, like what we're seeing on mortgage applications and all that type of thing, we have to realize that one thing, and this is a hard thing to swallow, people have not shown. People have not really felt a lot of pain, and so people are irritated, or they feel like they don't want to pay more, but they ultimately have been paying more, and willingly so. There is some good points around this. We've only for 3 years we run the stress test. So if we think about prime being now at 5.45, a prime, a lot of people having prime minus one, 4.45 being their interest rate. We stress tested them all at 5.25. So when people say, "Oh, I can't afford it," the truth is, for the last 3 years, we've been having to make sure people can afford 5.25% interest rate on every mortgage. Sometimes a little more. So that's why we're seeing a lot of behavior where people are saying, "Well, no, it turns out like it's not perfect, but I'm going to pay it. No one's selling their house or taking any draconian measures. And so there's more, people are able to afford more than they thought they could afford. I mean, I guess that is not a perfect answer, and that is, albeit still frustrating, but that is the reality. A few other things that we need to be aware of right now is that during COVID, people saved massive amounts of money. You might feel like, I didn't really save that much money, but the statistics prove, and also applications that we see, people have a lot more in savings. We've always believed, and the data has always shown that people could withstand that about to October, and then you're going to see a lot of people start to change their spending behavior. So that's before the next rate hike. Spending behavior change as a result of less savings. The second thing that's really, really important to be aware of right now that could stop the rate changes is the trigger point. And so 70% of mortgages, this is just new data, and we talk about this, but most of our clients are not in a situation where their mortgage payment does not go up, but your ratio of principal interest. I saw someone that had to pay the mortgage off over 68 years. Not a mortgage I arranged, but a mortgage that they asked me my advice on. So the trigger point is moving, so it means that 70%, there's a lot of borrowers that have not had their mortgage payment affected, and that's about to change. And so that is going to change also on a lot of other lines of credit. Business lines of credit, the trigger points being hit, people didn't have payments changes, now they're going to change. Do you think it's going to change behavior? I would think so. So those are some big things to be aware of. And there was not clear data on how many people had taken those, and that's obviously slowed down how quickly people would make those behavior changes. So, in a nutshell here, rate changes are predicted still. I expected that they would be predicted because that would give people the behavior to not take their foot off the gas. But lots on the horizon that could indicate that the data is going to change. Right now, the data has not changed because there's not been enough time to change the data. But behavior has likely changed and will change more as a result of these things that we just talked about. And so, what am I recommending at this point? I continue to recommend staying on the variable. This is not when you lock in. You are inheriting these massive penalties, which are based on comparison rates. And I say this, and I've said this in videos before. I would, as much as I hate getting the call where someone says I'm up $300-400 a month on my payment, that's not great, and I don't feel good about that, and I don't feel happy that they're doing that. But I hate the calls, which we will get with fixed rates, where people go, hey, I'm trying to sell my home because I'm getting divorced, getting a relationship, I'm, need to move, and my penalty is $20,000-30,000. I can't clear title. They think the bank will give me a break. That's a hard no, and I've seen that over and over again. So hopefully that's a helpful update on the variable rate today, why things are the way they are. Hopefully get some more clear picture on when they'll move and all type of thing. If you want to talk about your variable rate mortgage, and we haven't, please reach out to me. Let's run some options. Let's talk about how we're going to weather through all the storm. Let's talk about all those types of things. Huge opportunities. You could be taking advantage of all the equity out there. Huge opportunities to do things. Please subscribe to this video if you can. If you're getting it on our YouTube channel, please share it with your friends. It would really help us out. Have a great day.